Today, New Zealand home prices take another knock. Hello again, it's Martin North from Digital Finance Analytics. Welcome to today's post covering finance and property news with a distinctively Australian flavour. Well, the latest from the REINZ for October 2022 shows that rising interest rates have caused hesitancy amongst buyers across New Zealand. While the national median price showed some improvement in September due to the mix of properties moving, prices continue to ease, sales activity remained low, and properties are taking longer to sell than in October 2021, they said. Across New Zealand, median prices for residential property excluding sections decreased 7.5% annually from $892,000 in October 2021 to $825,000 in October 2022. Month on month, that represents a 1.9% increase from $810,000 in September. The median residential property price for New Zealand, excluding Auckland, decreased 3.4% from $750,500 to $725,000, and there was a month-on-month increase of 1.5% from $714,000 in September. 4 regions had an annual increase in median prices in October 2022, and the Marlborough region reached a record median price up 20.7% to $781,000. But Auckland's median price decreased 12.7% compared to October last year, from $1,249,000 to $1,090,000. In fact, the region recorded 6 consecutive months of annual median price decreases for the first time since August 2008 to January 2009. All 7 Auckland districts had negative annual median price movements. The North Shore had the greatest decrease, down 18.2%. In Wellington, the median price was down 17.2% annually, from $1 million to $828,000 in October 2022. Wellington has recorded 5 consecutive months of year-over-year median price decreases, the first time since May to September 2011. All 8 territorial authorities had negative annual price movements, but 2 territorial authorities achieved record median prices. The Marlborough district reached a median price record of $781,000, and Invercargill City reached a record of $485,000. Jen Baird, the chief executive at REINZ, said, in October 2021, increased optimism over the easing of lockdown restrictions in Auckland, combined with a delay in the introduction of changes to the Credit Contracts and Consumer Finance Act from October to December, impacted market activity. Able to transact and keen to move before tougher lending restrictions were implemented, people came to market hard and fast, contributing to a sense of urgency that's reflected in the REINZ property data for October last year, and it's apparent in our annual comparisons. But in October 2022, the national median price decreased 7.5% compared to the same period last year. 4 regions bucked the trend, with Marlborough reaching a record median price. It's worth noting that while the region's location and size meant it can be less affected by some market headwinds, the median price is more subject to variability than bigger regions due to the smaller volume of transactions. For example, in September, the region recorded its lowest median price since August 2021. This month, it hit a record high. Time will tell, they said, if this high is the new normal or an anomaly due to relatively small numbers of sales. This year, several compounding factors have created uncertainty and hesitancy in the market, where there was confidence and urgency last year. Rising interest rates and the cost of living, tax legislation, property regulation, tightened lending criteria, and global events with macroeconomic impacts. We see downward pressure on prices, and the pace of the markets has come on down too. However, over the last couple of months, salespeople have observed an increase in inquiries and a noticeable increase in the number of first home buyers back in the market, Baird observed. The number of residential property sales across New Zealand, though, decreased annually by 34.7% from 7,486 in October 21 to 4,892 in October 2022. Month on month, that was a decrease of 4.3%. The sales count for New Zealand, excluding Auckland, decreased by 30.4%. That's from 4,798 to 3,338. And sales activity fell 2.4% compared to September 2022. The regions with the greatest annual percentage decrease were Tasman, which decreased 45% annually from 80 to 44, Auckland, which decreased 42.2% annually from 2,688 to 1,554, Southland, which decreased 40.9% annually from 149 to 88, and Northland, which decreased 39.1% annually from 184 to 112. In September, the data showed that the usual spring uplift was subdued. The story remains similar through October. Nationally, sales activity is down 34.7% year on year and 4.3% month on month. On an annual comparison, we're comparing to a period of heightened activity month on month. Looking at the actual numbers, we see a 4.3% decrease in activity. However, adjusting for a seasonality, sales were down 9.5% in October. That means they performed more poorly than expected compared to September. Properties continue to change hands and people continue to make life decisions. However, buyers and vendors are acting with caution, weighing up their options. There are signs of more buyers returning to the market. Owner-occupiers backed by equity still dominate the market, but with an increase in property on the market, easing prices, and banks lending again, we see first-home buyers dipping their toes in, they said. While this is positive news, further increases in interest rates are putting a dampener on buying plans in this buyer group. We've yet to see their interest reflected in sales activity. Meanwhile, reports from salespeople across New Zealand suggest investors do continue to step back, Baird said. Annual inflation has hit 7.2%, and the Reserve Bank has increased the official cash rate to 3.5% and is expected to increase it to 4%, with some commentators suggesting it could be as high as 4.25% by the year's end, with more increases to come in 2023. This means mortgage rates are yet to peak, and some banks are already increasing their fixed mortgage rates. And the REINZ House Price Index for New Zealand, which measures the changing value of residential property nationwide, showed an annual decrease of 2.9% from 3,928 in July 21 to 3,814, down 10.8% from its peak in November 2021. For New Zealand, excluding Auckland, the HPI increased 0.1% annually from 3,965 in July 21 to 3,969 in July 2022. There were 4 regions that had a negative HPI movement, and they were the same regions as last month. Auckland saw an annual decrease on the House Price Index of 7.1%, from 3,881 to 3,604. Wellington was down 12.7% on the index compared to July last year, from 4,159 to 3,361. That's the largest annual drop in the region's HPI since records began in 1992. Wellington has now ranked bottom 2 of all regions on the HPI for 9 consecutive months. And interestingly, Northland and Canterbury ranked top 2 on the HPI for annual value movements. Northland topped the index, up 10.4% compared to last year, and Canterbury recorded an annual increase of 8.8%. That's second on the index, after ranking first for 8 consecutive months. All regions have had decreases in HPI movements over the past 3 months, with a national decrease of 4.9% for the 3 months ended 31 July. The REINZ HPI takes many aspects of market compositions into account and so provides a more accurate result. They said when applied to the October data, the HPI indicates that the housing market value nationwide dropped 10.9% year on year, and in Auckland the value decrease was 14.3%, and it decreased by 8.4% outside of Auckland. Southland takes the top spot in the 12-month ending percentage changes for the first time since April 2020, and Northland and Taranaki came second and third respectively for annual percentage movements. The importance of the HPI is evidenced in the Southland region this month, where the median sale price tells a different story to the HPI, they said. The median sale price in the region decreased 4.4% in the past month and 2.8% since October 2021. That's the third lowest monthly return and a middling annual return compared to the other regions. This suggests a market where value growth is declining, indicating poor to moderate results compared to other regions. But the Southland region have the strongest monthly performance in HPI with a 1% increase and the strongest annual return with an increase of 3.4%. Sample composition changes, such as the size of properties or the underlying value of properties sold, can change statistics such as median that are purely based on price. However, because the underlying value of each property sold is considered by the HPI, such sample changes have little effect on HPI results. So in summary, long-term property value growth in Southland is increasing faster than other regions, one of only 2 regions to see an annual increase in HPI, and the recent performance has been relatively strong as well, a fact that would have remained hidden from those monitoring statistics without access to the HPI. And across New Zealand, the median number of days to sell the DTS, a property, in October was 44. That's up 10 days compared to October 2021. And month-on-month properties were on the market 3 days fewer. For New Zealand, excluding Auckland, the DTS increased 14 days to 44, though 5 days down compared to September. And the West Coast had the lowest DTS of all at 23 days, an annual decrease of 13. National listings were down 4% annually to 9,289, and New Zealand, excluding Auckland, saw an annual increase of 3.3%. Overall, 9 of the 15 regions saw listings increase compared to October 2021, with 4 seeing an increase of 20% or more. Northland had the greatest increase in listings, up 48.8%, followed by Waikato, 36.5%, Nelson at 31%, and Marlborough at 20%. Gisborne had the greatest annual decrease in listings, down 21.9%. Taking New Zealand as a whole, listings were down 4% compared to the same period last year. However, 9 regions saw an increase in listings coming on to the market. Spring tends to be a preferred time to sell as people look to make their moves ahead of the holidays. More listings, more options, and more people preferring to take their time to make purchase decisions means properties are staying on the market longer, they said. The median days to sell now sitting at 47, up 10 days from October last year, but selling faster than September. And at the end of October, the total number of properties available for sale across New Zealand was 26,577. That's an annual increase of 74.4% from 15,217 in October 2021. For New Zealand, excluding Auckland, it was 16,237. That's an annual increase of 88.5% from 8,614. Southland and Gisborne are the only regions to see inventory levels increase annually by less than 50%, up 38.5% and 23.1% respectively. And 5 regions had over double the inventory they had last year, with Nelson and Waikato again experiencing the greatest annual increase in inventory levels at 184.2% and 142.2% respectively. Stock levels were up 74.7% compared to October 2021. All regions have more properties for sale, putting downward pressure on prices. For owners looking to sell, this consideration will impact their decision making. For those motivated to sell, working with real estate professionals who know the local market will ensure you have the right strategy to achieve your sale, said Baird. And nationally, 12.2% of properties, or 597, were sold at auction in October 2022, compared to 29.7% in 2021. New Zealand, excluding Auckland, saw 7.8% of properties, just 260, sell at auction, compared to 21.8% the year prior. Auctions represented 38.9% of sales. In Gisborne, just 14%. That's down 49.2% in October. And in Auckland, 21.7% of sales were auctions for 337, compared to 43.9% at the same time last year. So given the noise in the market and the low sales volumes, the conclusion is property prices are continuing to grind lower. People are taking their time. They're staying on the market. And there really is very little expectation that this is going to change anytime soon, because the Reserve Bank of New Zealand is expected to continue to lift rates into next year. And as I've said before, availability of credit is by far the most significant factor which influences the direction of property price growth. So I think New Zealand is still leading the curve when it comes to property price falls. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.